just take a step back and try and analyze all the commentary coming in from the Fed and on the ongoings in China as well. We have Santosh Rao joining in on the show right now. Santosh, how good morning. Good to have you on the show. Just wanted to analyze Jerome Powell's commentary at the Jackson Hole, because I guess amidst all the hawkish commentary, the key takeaway that perhaps cheered markets was them saying that Fed is going to proceed carefully on whether to hike again. So somewhere hinting that they're not going to really disturb the apple cart.
Exactly. I think that's been his game plan, to keep the optionality of raising, even though all indications are that things are slowing down, the conditions are restrictive enough. So I think he knows that. So he said he's data dependent. So let's see what the job reports comes out this Friday. It's going to be pretty. I think the labor imbalance that we've had, I think that's it's gotten much better. So the supply demand of labor. So I think that's good. So even the lending standards have tightened and all that. So there is enough restrictive stuff. So he doesn't have to worry about runaway inflation on that side. And overall inflation is rolling over. So I think that's good. He's going to wait and see. He said that higher for longer. At best, at worst, according to my estimate, there might be one raise towards the end of the year if conditions worsen. But at this point, looks like things are pretty much on track. I mean, we can see there's some visibility as to things stabilizing at a higher level. I mean, he's not going to cut rates. He's going to keep it here and just wait for the lag effects to play out.
Okay. Santosh, are we going through that phase of the market where bad news is good news?
Yes, bad news is actually bad news is bad news lately.
It's reacting, Santosh. It's like saying everybody is saying inflation is coming back. That means underlying growth is strong.
Right. No, I think there were some excesses in terms of the housing, the shelter, and all that. So I think it's coming down because there are some structural issues that was really driving up inflation. I think that's coming down, and the people had all the fiscal stimulus money that was thrown out and that was given to everyone. That's kind of running out. So all that thing, the consumer is slowly weakening, but it's still down, and that kept the inflation rate high. I think that's coming down as well. So I think in that sense, things are improving. The structural reasons for inflation, I think, are getting much better now. So let's see. I think overall, the companies are beginning to stop raising prices. They need to, because at this point, I think people are cutting back. The demand side of the equation is getting weak. So things like that. So I think overall, what I'm expecting is multiple compression, because as inflation comes down, the nominal revenues will come down. That's going to squeeze the margins. So I think that's going to have an impact on the multiples. So I think overall, that's why you see markets, every rally is being sold. No one is buying the rallies, they're selling the rallies. So I think that's where you see market has become defensive. They want things to come down. So we don't want any, in a way, you're right. Good news is bad news, because we don't want too much of good news, because the Fed is going to take that as a cue to keep inflation high or interest rates high. So in that sense, I would agree. Good news is bad news. Definitely. We don't want too much good news.
Santosh, at a time when we're seeing that, the commentary from the Fed is that sticky inflation will lead the central bank to keep interest rates a bit higher. What's the outlook on the 10-year yields, given that recently as well we had seen them at their highest level since November 2007? Now they've petered off, though.
Yeah, talking to the rates analysts and reading the people who follow that market very closely, it's pretty much peaked here. I mean, the 10 years, it's been at very high rates. I think with inflation kind of cooling off, I think the rates seem to be stabilizing there. And from what I'm hearing, that we are at peak in terms of long-term rates, like the 10 years and the 5 years. So let's hope that, because we don't want that to go up too much, and that's going to have an impact on the valuations again. So at this point, it looks like that's kind of peaked. The rates have peaked.
Santosh Rao, always good chatting with you. Thank you for taking the time out.